Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a special eye on unpredictable American policy instability. The Trump win unhinges many things, including the path for central bank rate cuts. The ones announced today may be the last until the direction of US fiscal policy is revealed for certain. In the shadow of the Trump election win, a range of billionaires are lining up key roles in his administration to extract payback for their support. It's all very unseemly, but should be no surprise. The current estimate is that just 6 of them have gained more than $60 billion in the first day, and that'll be just the start. The US Fed has released the results of its November meetings. A 25 basis point rate cut came as anticipated to 4.75%. It may be too soon to expect them to have assessed how they need to prepare for Trump 2.0 policies that are expected to swell the US federal deficit in a significant way and reignite serious inflation. Their options may be discussed more at their December 19 meeting. Meanwhile, US initial jobless claims came in at 212,000 last week, almost exactly as expected. There are now 1.65 million people on these benefits, almost exactly as it was in the same week a year ago, and back to pre-pandemic levels, even though the employment on their labour force is now 7.5 million people more than pre-pandemic. The US labour market remains unchanged and strong. And China is getting an export boost from orders that are anticipating a clampdown in trade with the Middle Kingdom from both the US and the EU. Exports surged in October by 12.7% from the same month a year ago, a 27-month high, much faster than the forecasted 5% growth and up from a 5-month low of just 2.4% growth in September. More reflective of their state of their economy, imports fell 2.3% in October from a year ago to a 4-month low. Imports fell from Asian countries, the EU, and even best buddy Russia, but grew from the US as China hoarded soybeans and other grains. Imports from Australia are down 8.7% and from New Zealand down 11% so far in 2024. Both of us are being weaned from the Chinese economy quite quickly now. Since June, European retail sales have been rising, which you may find counterintuitive given most of their data is dull and unimpressive. They were up 2.8% in September, though, from a year ago on a volume basis. There is life left yet in the EU economy. And container freight rates rose 7% last week from the week earlier to be 240% higher than a year ago and 140% higher than pre-pandemic levels. Demand from China to Europe drove these rises, but as we've noted before, this is probably just in anticipation of trade clampdowns. Bulk cargo rates were up 2% over the past week to be 6.6% lower than the same week a year ago. The US Treasury 10-year yield is now just on 4.35% and down 7 basis points from yesterday, and the price of gold will start today at $2,693 an ounce and back up $26 from yesterday. Oil prices are unchanged at $72 a barrel in the US, while the international Brent price is still at $75.50 a barrel. And the Kiwi dollar starts today at 60.2 US cents and up 80 basis points from yesterday. Against the Aussie, though, we're down 20 basis points at 90.3 Australian cents. Against the euro, we're up 40 basis points at 55.8 euro cents. That all means our trade-weighted index starts today at just on 69 and up 30 basis points from yesterday at this time. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.